So, nearly 1 month out from the US presidential election, we're here to talk about how US equity capital markets have fared with Mark Brightbill, head of ECM relationship here at Dealogic. Mark, how was November for equity capital markets in the US?
Leading up to the election, there was some uncertainty in deal activity, but November fared quite well. We saw 77 transactions priced, totaling over $19 billion in capital. 3/4 of that came from the block market, which saw 34 deals priced, the fourth most on record in a given month. Another interesting thing we saw was 3 straight weeks of the market rallying post the election. Within there came equity sector rotation, which led to the healthcare sector pricing 19 deals and finance pricing 13.
Okay, but not much in November from the oil and gas sector, which has typically accounted for about 30% of block trade volume so far this year. Mark, how has this year compared to previous election years?
Since 1928, the S&P 500 has only declined 4 times during an election year. 2 of those were the 2000 tech bubble and the 2008 financial crisis. To date, we actually have the S&P returning over 7%, and we expect it to stay positive for the year. ECM activity during the month of November, since Dealogic started tracking data in 1993, has averaged 101 deals. During election years, it's just been 84.
So not an unusual election year this year around. Mark, tell us, what can we expect towards the end of 2016?
Great question. So with less than a month of trading left, we have 30 deals in the US IPO backlog. 2 are notable transactions we do expect to price this year. The first one being Athene, which is backed by private equity company Apollo. Interesting point here is 16 book runners are underwriting the transaction, the most for a US IPO on record. Secondly, we have the Wild Horse Resource deal, which is expected next week and will be the first oil and gas IPO to price since OPEC announced the oil production cut.
Mark, thank you very much.